Every morning, the countdown begins for the markets with meticulous research and analysis designed to help you capitalize on the trading day. Beaming live from the CNBC-TV18 Motilal Oswal studio.
Good morning, hello and welcome to Bazaar Morning Call. We're coming to you live from the CNBC-TV18 Motilal Oswal studios. I'm Surabhi Upadhyay. With me as always Nigel D'Souza and Reema Tendulkar. And what we have is another mixed set of cues. A little bit of caution in global markets, but hey, there's at least one trade deal on the table now.
Indeed, counting down to 9th of July, Vietnam, US done. Yeah. Though we still don't have the trade agreement, the final contours of it, but will India be next?
Well, we've got the social media posts. It starts with that.
Yeah, hopefully show some love to us, So let's see how that goes. But interesting times. I think by the end of today, we'll be on our own steam because US markets as well will be shut tomorrow. So they have a long weekend. Yeah. And me too. But let's get straight to the action.
That's true. 4th of July, I think Nigel's also going to celebrate in a different way. But let's get to the action then. What we're talking about is what was a slightly mixed close on Wall Street. The Dow didn't participate, but look at the other indices. The S&P 500 finally hitting a fresh all-time intraday high. And you even had the Nasdaq. The Nasdaq didn't quite touch that high, the all-time high, but it did end at a record close, and it's inching towards the all-time high, almost at 20,400. So good day for U.S. equities. Now, the markets were looking at, two different aspects, one positive, one negative. The positive was the fact that there is a trade deal with Vietnam. At least it's a deal. At least it's the promise of some stability, some finality coming to it. So what do we know? That it's going to be 20% tariff. All goods coming in from Vietnam to the U.S. will be tariffed at 20%. But that's not all. There's something called a 40% transshipment tariff that Vietnam would be subject to. What does that mean? That means that if there are goods originating from other countries, but they're being routed through Vietnam, shipped out of Vietnam, then they will be subject to 40% tariff. And that takes care of a lot of the issues and a lot of the, the claims that were being made that a lot of Chinese stuff was being routed through Vietnam and then being exported onto the US. So that's what we have. In exchange, the US is also getting absolute free, no barrier access to the Vietnamese market. So that's one deal done. Let's see whether India is next, which country is next. Now, that was the positive news on the trade deal. The negative or slight negative was on the jobs market front, because yesterday we had the private sector payrolls report, the ADP employment report come through. And there, surprise, surprise, there was a loss of 33,000 jobs versus estimates of a gain of about 100,000. This is the first time the ADP report showed a loss in monthly job additions since March of 2023. So that took the market by surprise. Though people argue that, the accuracy of the ADP report cannot be always verified. The big one is the non-farm payrolls report, the US jobs report, the government report, which comes out today because tomorrow is a US market holiday. Now, on the non-farm payrolls report, we're going with the expectation that in the month of June, over 110,000 jobs would have been added by the US economy. So let's see. This is the big market event that we are watching out for today. In terms of the action in the money markets, yields have been inching slightly higher. We saw that yesterday as well. The US 10-year is now inching to almost 4.28 was the level yesterday. This morning it's cooled off a little bit. That's because the market's also digesting the passage of this big, beautiful bill through the US Congress. And that we know it's going to add over $3 trillion in terms of US deficit. So that was weighing on sentiment. The dollar managed to finally gain. The dollar has been slammed down last many days. But yesterday it managed to gain a little bit versus a lot of global currencies, including the yen, the Swiss franc, the euro, and of course the pound. The dollar index managed to inch back close to the 97 mark in intraday action yesterday. This morning, again, the dollar index has cooled off. Let's pull up the DXY on the screen once again. It's again showing a slight flattening trend, but there was some buying that we saw yesterday. 96.73 this morning on the USD. Oil is not a concern, but it remains a big watch point for us. And yesterday, we had a 3% move in oil prices. Brent is now back towards $69 a barrel. And why did that happen? Because Iran has decided not to cooperate anymore with the UN Atomic Agency, which is the IAEA, in terms of further inspections. Iran basically is saying that, IAEA is always siding with Western interests, so why should we let them come in and inspect our nuclear program? So that led to a bit of a risk premium coming back in oil prices, something to watch. The Nifty, we've been battling with this range, and it's become a bit of a small, tiny resistance. This whole zone of 25,500 to about 25,600 to 650. Now, can the bulls punch through that? We'll have to wait and watch. The action's been very, very stock specific. And the problem with the large caps is that while DII buying might happen, FPI selling is still a phenomenon in the market. And Rima will talk more about that and we'll get to it. But for the time being, it's this range and we need to take it out decisively for the next move up, perhaps.
Okay, but just to get back to the big story which is shaping sentiment today, that's the US-Vietnam trade deal. And the question is, what could be the potential implications for India? For instance, can India become more competitive with Vietnam facing 20 to 40% tariffs? India is still subject to the 10% universal tariff. So even as we negotiate our final deal and iron it out, can we make ourselves more competitive? Secondly, with a full market access to Vietnam, with US enjoying a full market access to Vietnam at 0% tariff, can Vietnam become a more attractive export base for US-bound production, especially for US firms looking to relocate from China? Or will it put pressure on India to liberalize tariffs and market access? Will US, for instance, expect similar concessions from India in the bilateral negotiations which are going about? And just to that point about that ADP data, because it's the private sector data which is captured, it just ties in with the headlines that we're getting. Microsoft, for instance.
Yes.
Microsoft announced that they're laying off 9,000 employees in the latest rounds of cut. This will impact 4% of their workforce. And this is the second big wave of layoffs coming through from Microsoft. Or even Amazon. Amazon said that they're deploying their millionth robo at their facility. So clearly signaling a rise of automation, the rise of AI, which is impacting jobs to some extent. Once again, to revisit the flows number that we had yesterday, the DII's net bought about 3,036 crore in the cash market. The FI's net sold 1,561 crore. What to watch today back home? Well, it's the Nifty weekly options expiry. Q1 updates we'll get to in greater detail, but they're coming through from Avenue Supermarts, M&M Financial, PNB, Indian Bank. There is a block deal in Nykaa, a QIP in Shakti Pumps. Keep your eye out on the April textile stocks after the US-Vietnam deal. And just to remind, US markets not just have the Independence Day holiday tomorrow, today they also have a truncated trading session. So will it impact European trading action? Nigel?
Well, that's right. The top two cues today will be on the global front. The US, well, they have given a pretty okay deal to Vietnam, so that's going to be in focus. What's India going to get? That's the big global cue out there. Jobs report, as you all mentioned, later this evening. And on the domestic front, we have the weekly expiry that plays out that always has some bit of a zing to it. So we'll watch out for volatility in the second half of trade. Moving to the cues. And I'm still not too worried with regard to the Nifty. Yes, trading has been a little bit subdued in the last few trading sessions, but the VIX continues to remain at very depressed levels, and that's normally a bullish indicating. And yesterday, though we had the Nifty that was lower, the VIX as well cooled off. That's one bullish indicator. So that's point number one. Second factor is the FIs are getting confident on the short side. If you look at what they did on, index futures, they added close to on 6,800 contracts or thereabouts. They remain net short with close to on 67% on the short side. And if you're looking at the options data as well, they wrote calls yesterday, and they wrote calls, quite aggressively. But first, let's look at the positioning. In yesterday's trading session, the FI net short positions, well, it went up by close to around 10,000 contracts, while the clients, the net long positions went up by close to around 3 times. So that's how they're positioned right now. FI is net short at 50,000 contracts. Clients are net long. This is the data point that I'm talking about. The FI has not only shorted the index futures, they also went ahead and they wrote calls. Close to around 1 lakh calls were written yesterday. So that sort of a confidence actually is not such a bad thing, because these shorts can get caught on the wrong side, and a market that's devoid of any kind of shorts actually is a bit of an issue, because you're not going to see big kind of inflows in the cash market. Then you're hoping that in the FNO market there are shorts in the system, which is the case right now. The PCR, that as well has come down to the lower end of the range. It's at around 0.78 or thereabouts. At around 0.65, 0.7, that's where we see it base out. And the reason that the PCR has come down is because the call writers are getting very, very confident. Even in yesterday's trade, 25,500 call, 25,450 call. Between them, more than 1 crore shares are added. Which brings us to the levels. The 20 DMA is going to be important. That's at 25,100 or thereabouts. And the recent resistance level now becomes a support. So in terms of levels that we're looking at, that's the important mark. 20 DMA, and this is the recent resistance mark, which now becomes a support. So you don't want this level to break on the downside. For today, the 25,350 should be the level that should hold out, by the end of today. On the upside, the recent high, 25,670, that becomes important. Let's look at, the Nifty Bank. That as well, it's seen some kind of a pullback in the last session or thereabouts, but it continues to defend this 20 DMA, which is, around this mark. So that's going to be important. You want it to defend that mark. The stock that I'm looking at is CPCL. That's Chennai Petro. The stock in yesterday's trading section actually was quite strong, and it's continuing to defend this 20 DMA, which is at around 660 rupees or thereabouts. And, fundamentally as well, things are working for them. Refining margins have moved up. Next couple of quarters will be quite good. And replacement cost actually is, much higher in comparison to the EV that's trading at. And if it's a debt repayment, then that could be an additional trigger. And yesterday, massive delivery-based buying on this counter. I think for the next couple of results, I'll keep an eye out on CPCL, going by the fundamentals and going by the delivery-based buying I'm seeing on this one.
Okay, all right. So Chennai Petro is going to be on our radar. Nigel, thanks for that. Let's get started then with the equity call of the morning. This one's coming in from Vikash Jain of CLSA, who says that with a 2-year EPS CAGR of 11%, Nifty earnings growth is now mediocre. But India has again become the most expensive market in the world on a PE basis, and is at a very rich premium versus emerging markets, Asia ex-Japan and China. Nifty's valuation versus bonds is below the danger mark, and investor sentiment still is in the neutral zone as per CLSA's proprietary India Bull Bear Index, and this may be the silver lining for bulls. CLSA has added Bajaj Auto to its portfolio and removed Britannia. Vikash adds that a combination of extended valuations and risk of earnings downgrades makes them cautious in the market in terms of near-term returns. CLSA prefers the defensives along with autos, energy, realty and banks.